FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
You are listening to the Financial Survival Network. This is Kerry Lutz. Meantime, we've been talking about gold and silver. You're probably sick of hearing about it at this point, but what can I tell you? I can't emphasize the importance of yesterday, of June 19th enough, because it broke through so many trend lines, so many resistant points, round numbers, both gold and silver on the same day. You really need to pay attention to it. But in the meantime, let's talk about the stock market, where it's heading there, because the stock market went up on the same day and broke some records as well. That's why we got Alan M. Newman with us. You know him well from his stock market cross currents. I mean, he's been doing that for well over a decade now, and he's been watching the market for many decades. Alan, welcome back to the show.
Oh, thanks for inviting me back on, Kerry.
Hey,
always enjoy being with you.
Likewise. And, people are wondering, the market, I mean, you said it yourself, it's in record territory, so there are no resistance points. Let's face it. What is there to stop it from going higher other than perhaps a loss of confidence, a loss of momentum, and perhaps, at least in theory, a cutting back of funds by the Fed, right?
Yeah, well, ironically, the time to get excited about a market is when it's depressed. So you take a look at U.S. stocks, and by any valuation measure, you might want to use. We're so overpriced. The Schiller 10-year PE over 26. It's ridiculously high. It was a little bit higher in 1929, and of course it was higher in the run into the year 2000. But
that's confidence
both
inspiring.
Both of those did not turn out too well. So how do you get excited about a market like the stock market, the U.S. stock market, despite the new highs? You can't. However, you can get excited about something like gold. This breakout this week, I think, is just phenomenal. It's the most exciting thing I've seen in a long time. And, actually, going back to stocks, I'll tell you when I was excited. March 2009. We made a major bottom, and you could get excited about stocks then. You had to see some upside potential. We were washed out. Unless we were going into a full-fledged depression, we were definitely washed out. And guess what? Gold was pretty washed out a month ago, 2 months ago. So I think the breakout that we saw this past week, we're up over 3% on gold. This is legitimate. This is exciting.
Mm-hmm. Yeah. So stocks, how much higher can they go? How much upside do they have? By all measures, they appear overvalued. I mean, and the Dow is having real trouble hitting 17,000, isn't it?
Yes, it is. But, the round numbers don't really offer resistance. I've seen the Dow hit round numbers many times before. When NASDAQ was at 4,500 back in early 2000, I said, oh, my God, this thing is going to hit 5,000. And sure enough, it did. And the S&P, we've had 1,600, then 1,700, then 1,800, and then 1,900. I don't see round numbers as presenting any type of difficulty. What I do see is valuation measures getting in the way. I mentioned one with the Schiller 10-year PE. Margin debt is another. We had a record just a couple of months back, over $500 billion. That has never happened before in total margin debt. And margin debt versus GDP was up to 3%. The only time that has happened before was back in 1929. And margin debt has come down a little bit. It came down to $475 billion in April. We don't have May numbers yet. They should be released any day. They could bounce a little bit, and if they bounce, it means the market's still going up a little bit. But we're in the very last inning. I can't tell you that we already put in the high. We may have. I can't tell you that the high is coming tomorrow. The typical resistance lines don't matter anymore because of what the Fed is doing, because of high-frequency trading. Just a word on mechanical trading, like high-frequency trading. You have traders out there who can make money on losing trades. So it really doesn't matter what price they buy stocks at. And let me clarify that. They can make money on rebates from the exchanges. The theory is they bring in so much volume, they give them market liquidity, so the exchanges pay them to trade. So they may buy and sell at pretty much the same level, but they're going to make money from the exchange on a rebate. So that is how our market is impacted by mechanical trading. You have some traders out there, it really doesn't matter what price they buy stocks at. That's one of the reasons why prices keep on going up and up and up.
Mm-hmm.
But all of this good stuff comes to an end.
Mm-hmm. Well, every bull market must one day end, right?
Right. And if you take a look at the valuation measures, this is as good a time as there has ever been for a major stock market peak, for a huge bear market to arrive.
And as we know, the stock market has been totally divorced from the real economy for quite a while. And how long can that go on for, right?
Well, when we start seeing second quarter GDP numbers, if they are not enough to cause everybody to say, yeah, you see, the first quarter was just adoration, I think that folks get very, very scared. Now, we won't see those estimates for a while, but I think it's starting to work through the investment psyche, that those numbers are not going to be that good. And that is why the market is having trouble at Dow 17,000. And why there seems to be, we're inching up here. We can't make these big moves anymore. And we're also seeing, I think we're beginning to see the mentality focus on high inflation coming down the road. It just has to happen. There has been so much monetary accommodation over the last few years. The inflation figures are vastly understated. It's not 2.5%. I mean, there's no way. John Williams' Shadow Stats has some very interesting charts up there. He has some alternative measures. If you look at his measures on the 1990 CPI, the way that was based, inflation is up around 6%. If you look at the way we used to compute it in 1980, it's up at 10%.
Yeah.
And this is, I think, to anybody's rational thinking, this is what inflation actually is. Because if you ask your wife what she's paying for groceries, see what you're paying for gasoline, if you see what you're paying for fuel oil, this is what the truth is. Inflation is much higher than is stated by the Federal Reserve, by the BLS, by the Bureau of Labor Statistics.
Yeah, I know. I just filled up my tank with $4 non-inflationary gas. It's a good thing that we don't have inflation, or it would have really been expensive, right?
Well, I got a hybrid back in 2009, so I'm a happy camper.
Yeah, but you pay extra for the hybrid, so, it's like there's a trade-off, right?
Yes, there is a bit of a trade-off.
So you wonder, how much do you really benefit? And, we're getting to the point where the hybrids don't cost that much more than regular, but
right.
Yeah, it's really disconcerting, and they can only pull the wool over the eyes of the public for how long? Till the public kind of wakes up, and it's just a mess. And then you see the geopolitical situation crumbling around the world, and it's eventually you got to look and say, yeah, there's something really wrong here. Something. Yeah,
I think the
something's amiss.
I think the political situation is going to be very important in the months ahead. I think we have lost respect around the world, and we're going to continue to lose respect. I think we need a new leader.
Yeah, or a leader. How's that?
Yeah, a leader. That's very good.
Because we certainly are leaderless. We're a ship without a rudder, an aircraft carrier without, just running around in circles out in the middle of the ocean.
It certainly seems that way, and we seem to make the same mistakes all the time.
Yeah. Hey, Vietnam 1, 2, 3, and 4 recently, huh?
Yeah, and I think we're at this point pretty much powerless to do anything about it. I don't even want to comment about Iraq. I'm not happy with what's happening in Russia and Ukraine. I just think we're kind of powerless at this point. We need new leadership.
Yeah, not to mention what's happening at home with just complete, utter, total breakdown of the rule of law and complete and total lawlessness here that's broken out. I mean, the rule of law, Alan, just doesn't seem to apply anymore. It's just shocking.
I agree with you.
Yeah, I mean, you ever think you'd live to see the day, you know?
Well, you know, if you think about it, this is another reason for gold and precious metals to find support here and begin another bull run. There's just so much uncertainty out there, and I think that will grow in the months ahead. It may just be that we're going to have one of those typical stock market swoons in the fall, and we're all going to be looking for a good area to put money, and I think that will be gold and gold stocks.
Sell in May and go away, huh?
Yeah, absolutely. It actually has worked better in recent times than it did in the past. I mean, I've kept charts back to 1950, charts back to 1984, and then back to 2000, and then back to 2008. And guess what? Sell in May and go away has worked better over the shorter term than it has over those longer time frames.
What about the resource sector here, particularly the mining stocks, but also oil, energy sector? You feel that you're better off in the physical metal, or can you go to the resource sector? But let's talk about that when we return on the Financial Survival Network.
FSN Radio.
Urgent alert. Ex-Secret Service agent claims it's worse than people know. One of Obama's former Secret Service agents recently smelled a rat. What he discovered inside our government was so devastating, he only saw one option. He quit. What's worse, he fears what he found could affect your job, your neighborhood, and most importantly, your family, very soon. It's worse than people know, he said in a recent interview, and I'm not trying to scare you either. We, too, share his concerns. This is why we've devoted the better part of 3 years collecting solutions for nearly all problems created by intrusive governments. And we've succeeded. Go to hiddensecrets1.info to check out all the details. Our panel of insiders have devised a legal but sneaky set of solutions to help you reclaim your privacy from the NSA, opt out of Obamacare, and make a bundle from little-known investments and small business opportunities. Simply visit hiddensecrets1.info. That's Hidden Secrets, the number 1.info.
FSN Radio.
When your accountant wants tax-free income, this is what he does. Accountants know the law. They also know that any American could legally get paid up to 3 times per month, 100% tax-free. That's 36 tax-free checks each year. It doesn't matter what you make already. This simple strategy could work for anyone. Go to www.irsrevenge2.com to learn how. That's IRSrevenge, the number 2.com.
The Financial Survival Network. It's all about what's next.
We're back. We're with Alan Newman. We're talking about precious metals, but now we're talking about the mining stocks and the resource sector. So your thoughts, Alan, on that sector?
I think it's a great question. For months as these gold stocks have gotten savaged, I have been a very big fan of accumulating. You know, so like Dr. Mark Faber always gets on CNBC and he's saying, I'm accumulating gold. Well, that's the way you have to play this game. And the breakouts we've seen this last week are stupendous. I mean, I'm looking at a chart of Eldorado Gold right now, which I actually put in the newsletter a long time ago, and we put it in the newsletter at higher prices. But, you know, this was a long-term game to begin with, and I think a stock like this has so much potential. We had a tremendous breakout this week. And then I look at charts of like Newman and Gold Corp, which we've had in the newsletter. We've actually traded in and out of several times and made money. These, I think, are just gigantic breakouts. And if you take a look at some of the more speculative stocks, they're going to perform a lot better than bullion if I am right about my target in the future. I'm looking at a Dow Gold ratio eventuality of 5 to 1.
5 to 1?
So,
it could go even lower than that, though, couldn't it?
Right, sure. I mean, we were down to 1.3 to 1 when gold topped out in 1980. So it could go a lot lower. I think 5 to 1
conservative.
a very conservative figure. I actually have a target of 5.67, which was the average from 1975 to 1994, as a worst-case scenario for gold, that we get to 5.67. 5 is a better target. So just for the sake of argument, if you take that out 5 years, and let's give the Dow 20,000. I mean, why not? I mean, stocks do go up over the long term. Maybe inflation takes hold and we have 8% inflation a year. I would expect the Dow to be up a little bit, but that's going to take gold to $4,000 an ounce. My better targets would have, with the Dow at today's price, gold at about $3,300 an ounce. And I could actually see gold as high as $5,000 or $6,000 an ounce someday.
Really?
Now, what is that going to do for some of these mining stocks? Oh, my goodness.
The
And
leverage,
Eldorado mines gold for, I don't know, like $900 an ounce, somewhere around that level. They'd be making a bloody fortune. And it's even better with the speculative stocks. A lot of these companies would be bought out for triple, quadruple what they're selling for right now.
Yeah, because the production has really declined so much.
Right.
What people don't understand, what you might not understand, is that production in gold and in silver as well has really declined precipitously over the years, and this depression in mining stocks has really taken it even further down. Gold production around the world has been declining for years, for a better part of a decade. So when you see how much gold has declined, production numbers, and the fact that many mines have closed because of the past 2-3 years of declining gold price, that's brought the price of gold less than the price of producing an ounce of gold, you can see what's going to happen to the price of some of these stocks, assuming that we don't have a systemic collapse. And, let's not get doom and gloom here. But
that would be the wild card. But I think we were taught in 2000 and from 2007 to 2009 what will happen if that is threatened. The Fed is just going to step in and do exactly what they did before. We have too many banks out there that are still way too big to fail.
Yeah.
Like J.P. Morgan, like Citi, like Bank America. And that dike is going to be plugged again if it happens. Of course, what that means is more money will be printed. And, even if the supply of gold expands because, price goes up, so there'll be a little more demand out there, I don't think there can be too much demand for gold. I think what we're looking at is disrespect for the monetary system in the next generation. And I'm talking about every currency that you can think of. The only currency that may be viable in the future is the one that has been viable for thousands of years, and it's called gold.
And silver.
Yes,
to a lesser extent.
Certainly silver.
But silver is too industrial. It needs,
yeah.
It's needed
My problem
too
with
much.
Silver is that I just follow gold.
Yeah.
I really don't follow silver. I suppose
we won't hold it against you. We won't hold it against you. But gold, silver, vital industrial metal, but it's got the monetary properties.
Right.
Alan, you can remember pre-1964, all of your dimes, your quarters, your half dollars, and even silver dollars once upon a time were 90% silver. But Johnson pulled them out because the metal content of the coins became greater than the face value of the coins, so they had no choice. And now, forget it. $1,000 face value is worth, I don't remember off the top of my head, 20,000, say. It's probably more than that. I haven't looked at coinflation.com lately. That's the site to go to if you want to know what your coins are actually worth in terms of melt value. But the day is coming, and I agree with you that the derision. Well,
there is another good reason for valuing silver very highly. You mentioned the specter of a worst-case scenario somewhere down the road. If we have a problem years down the road where there's just so much turmoil and gold is such a safe haven. It's going to be kind of hard to carry around Krugerrands to barter or exchange. It's much easier to carry around silver.
Yep, the people's
Don't
money.
need as much.
The people's money. Silver is the people's money.
Exactly.
And yep, that is the case. And don't forget the gold to silver ratio, currently around 62.5. It was up a couple weeks ago, almost to 68 to 1 ounce of gold. It's been as high as 80, and the rate where it's pulled out of the ground is around 10 to 1 right now. So the appreciation potential of silver as opposed to gold is theoretically higher.
Right.
That remains to be seen. Periodically, though, it does go way, way down. And it's going to be interesting to see here, Alan, where all this winds up. We don't know yet, but hey.
You did mention oil stocks and oil resources before. I've been a long-term holder and buyer of oil stocks. This is the kind of another one of these scenarios where you just add to your holdings and add to your holdings and add to your holdings. It is a finite resource.
Yeah.
And the world is running short or is going to run short on oil. China's got, 1.3 billion people now, or 1.
Yeah, you can't tell they lie about their population.
Yeah,
but
between India and China, you have 3 out of every 8 people on the face of the planet. India will be where China is in maybe 20 years, and China may have surpassed us in 20 years. So you're going to have these gigantic users of this resource, and the demand is just going to be off the charts. So that's another place you can put your money.
Yeah, agreed. Energy stocks and natural gas probably headed for another crash. But long-term, natural gas really does make a lot of sense, doesn't it?
Yes, it does.
So, because just clean energy, and we have a lot of it, and it really very efficient, and it's trading at such a huge discount right now to oil, isn't it?
Yes, it is.
So got to wonder, and these stocks pay dividends too, right?
That is absolutely correct. You can't go wrong if you're getting dividends.
Yeah. So as far as growth stocks, what about retail stocks? Got to be
no, thank you.
Retail apocalypse, right? I mean,
yeah,
Coach.
I was just looking at this the other day because I was thinking about writing a article on retail in the next newsletter. Unfortunately, Yahoo has not been updating their insider numbers, so that was always part of the analysis in the past. I can't use it because they haven't updated the numbers. But I did look at the charts. There were a couple of good charts out there, a couple of stocks making new highs. I think Walgreens was among them. I'm looking at the top 10 retailers, but I'm looking at quite a few that are not doing well, and I know what the situation looks like out there. The consumer is not where he was years ago. He's reluctant to spend money. I take a look at retailers like Best Buy, and I see a disaster in the making. The situation has not changed. I mean, it's up from the highs. It got down to, 22 and change in February. It's about 28 now. It got as high as almost 30. But the stock was 44 back in the holiday season, and this happens every holiday season. They just fall apart. I think it's going to get worse next year. We've seen Circuit City go out of business. We've seen the internet take away sales from everybody, including Walmart. People are going to Amazon to buy TV sets, to buy flat screens. And look where Amazon is. Amazon is down sharply. I don't want to be in retailers at all. I think that's definitely a sector to avoid. There's maybe one real estate stock that deals in malls that I would be in, and that's Simon Property Group. Maybe that one.
I don't know. That's pushing it.
I know. But I've been a long-term fan of Simon, and the stock has done quite well. They manage real estate properties extremely well, but it is a stretch.
Yeah.
I don't want to be in anything that
All right.
is a part of retail.
Well, Alan, time to go. Just give us the website where we can get your newsletter.
It's cross-currents.net. All you have to do is put the dash between the words cross and currents, and we're fine, and it's .net.
All right. And we'll have the link up on the show notes to this interview at financialsurvivalnetwork.com. Don't forget to subscribe to our newsletter, which is free, and it goes out periodically. Alan, thanks so much for being back on. Always
Thanks
a pleasure.
for inviting me back on, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.